Who better to continue this conversation than a former Oracle executive and the founder of a company that Oracle acquired. Zach Nelson, previously the CEO of NetSuite, acquired by Oracle back in 2016, as well as being the youngest VP of marketing ever for the company. Zach, good to see you again.
Great to see you.
You also happen to be on the board of PagerDuty. I see the T-shirt that you're wearing. We just had Jennifer on last week, I think it was, after earnings. So that's a company that's in the smaller size in the enterprise space right now. We seem to be going through another one of those periods of consolidation in enterprise tech. Out of the data center era, we're now in the cloud era. What kinds of companies are on the radar at a time like this for these mega caps that just have high valuation and lots of cash jingling around to spend?
Well, I think everyone's valuation is high. It's hard to imagine, a Datadog or, being valued at $40 billion on the revenue they're doing. So I think most companies that are growing fast, have high market caps, I think their focus really is on building large, sustainable companies. It's very difficult for them to be bought at this point.
But we are seeing that M&A activity ramp up, as Bob Peck told us, up 4x in Q3. So the deals are happening. Sometimes, especially in Oracle's case, when the smaller company doesn't necessarily want it. Historically, we remember PeopleSoft with Oracle. To what degree should investors think about what the big companies need more than even what the smaller companies might want to do?
Yeah, I mean, I think investors always have to look at the possibility of either the company they've invested in being acquired or large companies spending capital on smaller companies. I think there are a variety of different things to look at. One, if you look at Oracle, for example, they've already made a pretty aggressive transition of their existing products to the cloud. And they've done many acquisitions in the process of doing that. They've acquired marketing companies. They, of course, acquired NetSuite, which opened up new markets. So I think you're looking at technology acquisitions. You're also looking at market expansion. And if you look at what Oracle did with NetSuite, that's exactly what that was driven by. It was really not acquiring technology to help their enterprise customers. It was creating a new marketplace in the small and medium market where they really didn't have a footprint. And now they have an enormous footprint.
Hey, Zach, it's Deirdre. Talk a little bit more about your experience then selling your company, NetSuite, to Oracle. Did it have to keep the culture intact? Do you think that it would be able to do that with a TikTok, for example, to continue that culture of innovation?
Yeah, I think when you move into a new marketplace, as Oracle did when they acquired NetSuite, you have to keep that culture intact. It's a completely different go-to-market model. The traditional Oracle model is selling to the Fortune 500. How do you do that? You hire 500 sales reps. NetSuite sold to the Fortune 5 million. You can't hire 5 million sales reps. So the culture of those two companies was substantially different. And I think what Oracle did, in fact, was keep the company entirely separate, which is relatively unusual. Its own sales force, its own development team, its own marketing budget. And so, yeah, you have to definitely keep it separate. And I think as you look at TikTok, it's not that unusual for Oracle to be considering it. I think they've had great success with the NetSuite acquisition moving down market. The next step down market is very small businesses, which behave much more like consumers. And so I think if you look at market expansion and what Oracle did with NetSuite, there are some ways to look at TikTok as a move down market.
All right, Zach Nelson.